All right, guys, I'm going to try to make this quick. Big events happening today in the account. I'm going to switch over real quick and show you what's going on. Haven't done an update in a few days, so I figured I'd do it now. Market's kind of topping. It's acting a little crazy. I got to be honest. Nasdaq's on fire. Everything else kind of lagging. I don't know what's going on there. I have some theories that maybe I can float by you and see what you think. But first, let me show you what happened in the account. I'm sitting at about 142,000 right now, but I'm gonna go into the history here. History, and look at this. I got assigned to the call at 162.5. I never thought I would get assigned to sell Apple at 162.5. So $32,500 in the bank. You can see it reflected right here under the buying power. So $37,700, $1,000 from Robinhood Gold, and currently I'm going to be collecting a 4.4% interest on these holdings. It says it right here. It hasn't reflected yet on the cash earning interest. It usually takes a few days for that to happen, so it's going to happen soon, and I'm going to be collecting 4.4% interest on that $37,000, $37,700. I might be out of Apple soon. It's actually kind of crazy. I've sold a couple more calls out of Apple, and if this crazy rally continues, look at this, one at 167.5, another one a week later for 172.5. So if those hit, I'm done. I'm out. I'm just gonna be in cash. Isn't that crazy? It's kind of crazy. So I'm a little weirded out by this fact. I haven't been without Apple since I started this account, but it's just been such a sharp rise that it's kind of hard to justify that it's not going to have a pullback. So look at this 3 month, right? It's crazy, right? 31%. All right, look at the year. If I was a chartist, which I'm not a chartist, I'm not a technical analyst, but if I was a chartist, look what I could draw here, okay? Look what I could draw on the 1 year chart. High, lower high, right? 175, 174, 166, maybe 173. So that's 2 lower highs in a row. And then look at this, 130. 125, so a low and then a lower low. What about lower lows? Have you ever heard of lower lows and lower highs? That's called a channel. It's called a channel. So if I was a chartist, which I'm not, I'd be betting that Apple stays in this channel and corrects. Ironically, I have the same bet, but not for the same reasons. I just think that Apple is just overbought, and not just Apple, really, it's the entire market. There's a lot of anticipation of, the Federal Reserve moving to more of a pause, or at least a change in trajectory when it comes to their hikes. And people are taking that as a good sign, especially for tech stocks. But honestly, there's so many reasons and speculation as to why these tech stocks are climbing up, that you could take any one of those theories and be correct. And now we have a multi-dimensional theory as to why tech is going up. Everything from the expectation that there's going to be a sharp reversal of rates due to a one-off event, which is the most mind-boggling one, because if there was a one-off event, wouldn't the entire market crash with it? Why would you want to get ahead of that train? And then the other one is that the Fed is going to get scared and they're going to reverse trajectory, or at least pause for now, which is bullish for long-term assets. I get that. But aren't we close to the end game anyways? Aren't we close to that terminal rate that the Fed keeps talking about, or at least members of the Fed do, at around 5%, 5.5 at the most that I've heard? Aren't we there yet? I mean, we're actually there. So why wasn't tech playing up in anticipation of any of the rate rate hike cycle anyways? Do you think that there's going to be a lower terminal rate? Like, what's the thinking there? There's another theory. There's more. There's theories all over the place. There's another theory, and this theory is that the big tech giants are hoarders of cash. And what's doing well right now, guys, in the short term? Cash. So they're collecting, 4.4% interest. They have all, Apple has all this cash in Robinhood money market account. They're collecting 4.4 interest rate or more on their immediate cash, right? Short duration cash. That's what the rate is right now for short-term treasuries. And so that extra money is being factored in. 4.4% on 200 billion is quite a bit. So not just, I don't know how much cash. I think that's how much they have. I don't know how much they have. Maybe I should look it up. But the point is that where's stock analysis? Stockanalysis.com. Actually, Apple's right here. I can show you. Financials, statistics. How about that? Let me show you the screen. All right, so scroll down to the balance sheet. It looks like net cash is 54 billion. That's not too bad. So cash and marketable securities, though, they're collecting 4.4% on this 165 billion. Do you see this? And they're probably not paying as much on their debt because their debt is financed at a low percentage. It was financed earlier, before these low rates. So they're basically the opposite of a bank, right? The opposite of all these banks that are having problems because they have bought all these long-term securities like 30-year treasuries, 15-year treasuries. Apple is the opposite. They finance. They're on the other side of that trade. And not only that, they keep their cash in short-term treasuries, like months, bills, notes, whatever. So they're basically in the opposite trade of all these banks that are in trouble. So they should be in untrouble, right? Tech giants are in untrouble. Headline, big headline. So that's the story right now. It's crazy. So you can take any of these possible scenarios and make a case for the tech going up. So there's plenty of explanation out there, but I'm not buying it. Like, this is a little too rich. All right. What is the Nasdaq doing? Where's the didn't we have like isn't there like a search bar or something? Nasdaq. All right, let's see the Nasdaq. 1 year. Okay, 3 months. What? Look at the Nasdaq. I didn't even know. So it's actually is it just the tech giants that are, what is going on with the Nasdaq? Oh, that's the company, the Nasdaq, duh. I need to look at the QQQs. All right, so Nasdaq index is up 20% in the last 3 months. I'm dumb, sorry, I apologize for that. 1 month is up 6%. Okay, so it's roughly tracing Apple here. 1 week's had a nice rise. The one year chart, it's pretty similar. But if you notice, this is actually broken out of the channel. So if I were a technician, which I'm not, I'd be betting on Nasdaq. Actually, it broke out. So now it's forming a new channel, new trend. So this is pretty interesting stuff. I don't know what to think here, but my guess is that Apple's going to top out against that resistance and come back down into a more affordable rates of price at some point in the future, in the near future. But I could be wrong, and I could have made the cardinal mistake, which is being stuck with cash when everything else is going up. So that is a risk. I'm still going to have, income coming from not only the cash, but also Main Street Capital and realty income. So that's going to give me some cash. But I'm going to have too much cash in an inflationary scenario, so that might not be a good thing. I may be going a little too conservative here. I'm swinging from really ultra aggressive to a little too conservative. So the way I think I may remedy this, I think there is a remedy. What I might do with some of this extra interest that I'm earning right now is I might buy call options. All right, now hear me out, okay? So if I buy call options, that's a very leveraged way to play the upside of the stock market. And if it doesn't materialize, I lose out all the premium. That's correct. But at the same time, I'm thinking I'm taking too much risk by putting my entire, not entire, but by putting, 30, 40, 50, $60,000 at risk for the downside. So I could be paying 1K in premium for the next 6 months, let's say, and collecting a decent amount of upside versus risking a lot more capital, and even just a few percent down, that could cost me a lot in unrealized, value. So I'm thinking I might actually just buy some call options here. I don't know. Another thing that pisses me off among making, poor decisions or being confused or, having, 2020 vision, right? Retroactive vision. Is Smith & Wesson, man. Look at this. Smith & Wesson in the past 3 months. Look at this. 36.2. I saw Smith & Wesson here at the $10 mark, 10 something, and it's up another 20 something percent from there. How pissed am I? I had call options sold against Smith & Wesson that I exited because I wanted to take the money out. I definitely rushed that. I should have collected some money first. It was a good point to exit, but still, this would have been a lot of money. I would have still had the shares at 8,000 shares or something like that, or 80. I can't remember. No, not 80. Not 80,000. 8,000 shares of Smith & Wesson. And my options would have expired worthless, the ones that I sold. So that's another 5-10 grand right there. So it would have been an all-time high, actually. So speaking of regrets, there's one for you. Smith & Wesson doing better, but I still, I'm still not convinced. I'm still not convinced of the long-term prospect. I'm gonna have to catch this company at a lower price, or really be convinced by their numbers and their cash trajectory. So I'm gonna have to take another deep look at this company at sometime soon. I might make another Smith & Wesson video for all you Smith & Wesson fans out there, like me. So I just want to make an update video about that. I got a call assignment. Now I'm stuck with a lot of cash. My Apple is gone. I have 200 more shares. And if it keeps going, I'm going to have zero. I'm going to have zero Apple shares if this bull tear in Apple continues. So the target prices to watch, 167.5 and 172.5. So 167.5 in a week, by the end of the week, and then 172.5 next week, and then I'm clean. No more Apple. Feels weird. I don't think it will happen, to be honest. I don't think that Apple or any company, when they have a run like that, it doesn't usually last for that many weeks. Maybe a couple of weeks, but more than that, if it's this steep, it doesn't last. So I'm basically making this bet on past experience and what I've noticed in the markets. And I'm betting my entire Apple position versus 50 or $75 that I'll be collecting by selling calls, which is not that good of a trade-off, but I'm pretty confident that Apple is going to be correcting this week or next week, in which case I might end up with just 100 shares when the correction begins. Let's find out what happens. I'm really curious. Let me know if you own any of this company and what are you doing about this crazy Nasdaq market, and also if you have a story to tell or share, I want to hear about it. All right. Okay, that's it for now. Peace out.